Hi, this is Gary Kamen, and welcome to Trends and Futures Position Update for Thursday, March 1st. Again, please excuse my voice. I'm still fighting this cold. Today I'll have a look at currencies and watch for the review at the end of this presentation. It's new. A report showed today that weekly jobless claims matched a 4-year low, and for a second day in front of Congress, no mention of QE3 from the Fed. In other reports today here in the U.S., manufacturing slowed slightly and construction spending dipped, while auto and retail sales both climbed. Currently, the Dow is up 49, the S&P is up 9.5, and Nasdaq's up 22. Crude oil is up $1.46, and a special mention here, RBOB is up 7.81. So watch your unleaded gas prices at the pump tomorrow morning. Gold is up $11, and in currencies, the U.S. dollar is up 36, the British pound is up 38, the Canadian dollar is up 41, the yen is up 4, the Swiss franc is down 29, the euro is down 25, and the Australian dollar is up 43. And the Australian dollar is the first currency I look at on Thursdays. And in currencies, we're looking at the March contract, and in the Australian dollar, Trend Trader recommended a long January 10th at 102.49. Open trade equity as of close February 29th, which is 107.40, is a potential profit of $4,910. Second support is at 106.15, and that's giving us a potential profit of $3,660. And the sell trigger is at 106.34. That's giving us a potential profit of $3,850. And yes, there are times when the sell trigger's dollar value will be higher than support numbers. Last week, ADX was at 22. It's a weak trending market. Market's in a range. See the very strong uptrend we had here? That's back when ADX numbers hit 50. This week, ADX numbers are at 19.6. We could say 20. Still a weak trending market. DI plus is over DI minus. Market's still in a range. Bottom of the range, 106. Top of the range, 108. See that right there. Last week we saw MACD moving away from the signal line, adding divergence down. And last week MACD was bearish. This week MACD has dropped all divergence and is just riding below the signal line. You see that right there. Last week's stochastics were mid-range and coming down. This week's stochastics are mid-range and moving up. We'll see what happens here if the market hits 108. Here's our green technical trade signal right in here. Getting into this trade just a little bit earlier, maybe just above 100 here. In this area here. Here's a long position right in here. And what we want to see happen here is a breakthrough through 108. That's because we're long the market. We don't want to see the market breaking through 106. But we are managing some nice open trade equity in this trade of $4,910. I have no problem with these numbers here at 36.60 or 38.50. To put this in your pocket, just adjust your stops accordingly. And after the Australian dollar, we'll head over to the British pound. And in the British pound, Trend Trader recommended a long January 26th at 156.89. Open trade equity as of close February 29th, which is 159.19, is a potential profit of $1,437.50. Second support is at 158.43. That's giving us a potential profit of $962.50. And the sell trigger is at 156.95. That's pocketing $37.50. Last week, ADX numbers were at 23. Weak trending market. This week, ADX numbers are at 31. You see that there? DI plus is over DI minus, showing signs of strength to this move up right in here. The market has closed above 159 now, which was an area of resistance back in here. Good for our trade. Last week, MACD was coming down below the signal line, adding some divergence. It was bearish. This week, MACD is now crossed up over the signal line, adding a little bit of divergence. Last week's stochastics were mid-range and coming down. This week's stochastics are in overbought territory. As long as I see ADX numbers continue to rise, I'm not going to concern myself with this. You see the range of market's been in for some time? Right in here. Here's our green technical trade signal right in here, getting into this trade maybe just above 155 in this area here between 155 and 156. Here's the long from Trend Trader right in here. But currently we're managing $1,437.50 in open trade equity. Take out $900, $800, that's fine. I wouldn't give back $1,400 in this trade, or maybe you just want to break even. Only thing you don't do is let this turn into a losing trade. So adjust your stops accordingly in the British pound if you're trading it. And after the British pound, we're heading up north to Canada. And we're looking at the Canadian dollar, also referred to as the loonie. And I could joke about that because I'm half Canadian. Now in the Canadian dollar, Trend Trader recommended a long January 23rd at 99.08. Open trade equity as of close February 29th, which is 101.11, is a potential profit of $2,030. Second support's at 99.90, and the sell trigger's at 98.95. That's giving us a potential profit of $470. Why is second support so low? Very large range yesterday between the high and the low. You see that right there, here, and here. Last week, ADX numbers were at 20. weak trending market. This week, ADX numbers are at 21. DI plus is well over DI minus, but this is still a weak trending market. We have a bottom of a range here, maybe at 99.50 right in here. But we have to see where the top of the range is going to be. Maybe it was at 150 right here, but we don't see a strong trend in this area right here. But the market is up today, and last week MACD was running just below the signal line with very little divergence. This week MACD is now crossed up over the signal line with almost no divergence. Last week stochastics were mid-range and coming down. This week stochastics are just getting into overbought territory. Got to keep an eye on that with the weak trending market. But hopefully we'll continue to see this. You see, this is the line from last week right in here at 150 right here. That's right over here. In the last 2 days, you saw the market move up very nicely. Here's a green technical trade signal getting into this trade back in this area here, just above 97. You see that right in here. You see the market, how it came up to 99, it came back down to 97, and it came back up and never looked back. Broke through 99 here. Trend trade took a long. And that's why we're managing $2,030 in open trade equity currently. Take out $1,000, take out $820. That's fine. Adjust your stops accordingly. Just don't let $2,000 turn into a losing trade. And I'm sorry if I sound like a broken record, but too many people out there trading today let winners turn into losers, and that's a very dangerous thing to do. It is very psychologically damaging for your next trade. And after the Canadian dollar, we'll have a look at the U.S. dollar. And in the U.S. dollar index, Trend Trader recommended a short January 23rd. As the market broke through 80 here, at 79,934. Open trade equity as of close February 29th, which is 78,794 is a potential profit of $1,140. Second resistance is at 79,425. That's giving us a potential profit of $509. And the buy trigger is at 79,620. That's giving us a potential profit here of $314. Last week, ADX numbers were at 24. DI minus was over DI plus. So it was a weak trending market. The market was in a range. Bottom of the range, 78,500 right here. Top of the range, 80. This week, ADX numbers are at 26.4, and they're coming down. And that's on this move down in here as the market broke through 78.50. But yesterday, the market came right back up in the range. DI minus is dropping. ADX numbers are dropping. So I'd say this is still a weak trending market. Last week, MACD was just riding above the signal line with very little divergence. This week, MACD is riding just below the signal line with no divergence. Last week, stochastics were mid-range, coming down after correcting from overbought territory for maybe a day. This week, stochastics got into oversold territory, but look to be correcting. Here's a red technical trade signal getting into this trade a few days earlier on the short, but you could have waited below the break of 80 here. That would have been just fine. 80 was support here. Now it's resistance. So we're managing some open trade equity in the U.S. dollar index of $1,140. Take out 500, take out 300. Break even. That's fine. Just don't go into negatives here. And after the U.S. dollar, we'll have a look at the euro. Trend Trader recommended a long January 26th at 131.10. Open trade equity as of close February 29th, which is 133.39. It's a potential profit here of $2,862.50. Second support's at 132.08. That's giving us a potential profit of $1,225. And the sell trigger is at 131.16. That's giving us a potential profit, $37.50. Last week we saw ADX numbers at 27. They were coming up, showing signs of strength to this move up here. This week ADX numbers are at 31. Stronger trending market, but ADX numbers are coming down. And look at DI plus and DI minus. Keep an eye on that. But you can see how the market broke through 133. And that was last week. And for the next few days, the market actually tested 135 here. But now the market's coming down. I'm going to keep an eye on this area here if the market gets back into the range below 133. Last week, MACD was just above the signal line with no divergence. This week, MACD actually added some divergence on this move up right in here. You see that? But over the last few days, the market's dropped divergence. Last week's stochastics were just getting into overbought territory. This week's stochastics are still in overbought territory, but they look to be correcting. So you want to keep an eye on that. Here's where Trend Trader recommended the long here. Here's our green technical trade signal, getting into this trade between 129 and maybe getting in just above 130 right in here. These few points here would be extra open trade equity. Now you can see last week in the euro how we were managing $1,687.50 in the euro. Now we're managing $2,862.50 in the euro. Take out $2,000, take out $1,500, heck, take out $1,200. Put that in your pocket. To do that, adjust your stops accordingly. And after the euro, we're going to look at the yen. Now the yen's very interesting because the Bank of Japan is on our side in the yen. And Trend Trader recommended a short February 10th at 128.92. Open trade equity as of close February 29th, which is 123.21, is $7,137.50. Second resistance is at 125.24. That's giving us a potential profit of $4,600. And the buy trigger is at 129.22. That's giving us a potential loss of $375. Last week, ADX numbers were at 53. Strong downtrending market. Can't miss that right here. This week, ADX numbers are at 66. This became a stronger downtrending market. Last week, MACD was adding divergence, moving away from the signal line. It was quite bearish. This week, we do see some dropping of divergence, but I still say MACD is still bearish. Last week's stochastics were in deep oversold territory. This week's stochastics are still oversold. See that right there. This is the Friday. Trend trader got into this trade right in here on this little green candle here. Here's our red technical trade signal right in here, getting into trade just a little bit earlier, just below 131, or even through a breakthrough 130 right in here. If you could have done that, it would have gotten you in this trade just a little bit earlier, managing some additional open trade equity. But still, this is a very good trade. This helped a lot right in here when the Bank of Japan intervened, getting us through the 128 area. The market hasn't looked back since, except for this day right in here. See that right there? But here's 124.50 right here. The scales haven't changed because of last week's price action. Now we got 123 right here. We didn't have that back in here. So we're managing some very nice open trade equity in the Japanese yen. Everything is going our way in this short. And we're managing $7,000 in open trade equity. Second resistance is at $4,600. Very large movement yesterday from the high to the low. I take out $5,500 to $6,000 in this trade. To do that, adjust your stops accordingly. I'd rather see you put that kind of money in your pocket. It's an extra $1,000. Now, when you look at the Swiss franc's price action, it looks very similar to the euro. That's because the Swiss franc is pegged to the euro. Now, Trend Trader recommended a long in the Swiss franc on January 25th at 108.42. Open trade equity as of close February 29th, which is 110.69, is a potential profit here of $2,837.50. Second support is at 109.60. That's giving us a potential profit of $1,475. And the sell trigger is at 109.72. That's giving us a potential profit of $1,625. Here's where Trend Trader took a long position here as the market broke up over 108. Last week, ADX numbers were 25. They were coming up. And DI plus is over DI minus, showing some developing strength to this move up as the market broke through 110. You see that right in here. This week, ADX numbers are 29.7, or I'll round up to 30. And they're coming down. Look at DI plus and DI minus. And this is on a correction down from 112. You see that right here? Last week, MACD was just riding the signal line with no divergence. This week, MACD actually built up some divergence here. You see that? But is now dropping divergence on the move down from 112. Last week's stochastics were getting into overbought territory. This week's stochastics are still overbought, but look to be correcting down. So here's a green technical trade signal right in here. Getting into this trade maybe a little earlier, maybe just above 107 here. This area here, you'd be adding some nice open trade equity to the trade. Trend Trader is managing $2,837.50 in open trade equity. Adjust your stops accordingly here. Take out $2,000, take out $1,500. You know the range. Put that in your pocket. And the Swiss franc is the last currency I look at on Thursdays. But the last thing I want to show you today is a review of what I covered just now. It's a currency review. It's showing you the market that we're in, Australian dollar, British pound, all the way down, where we're at open trade equity as of close last night. Here's support and resistance numbers, what that puts in our pocket here. And here's the Trend Trader triggers right in here. You can see the totals here. As of close last night in our currency positions, we're currently managing $22,355 in open trade equity. If you place your stops at these areas here, you'd pocket $13,251.50. If you adjust your stops to this area here with the Trend Trader triggers, you'd pocket $5,957. Personally, I'd rather see you pocket $15,000 to $16,000, like in this trade here. Adjust your stops a little higher, but I usually give back on average 25% of my trade. That would put you between $15,000 and $16,000. If you think you can pick tops and bottoms successfully, go right ahead. But the yen can continue to drop, adding to our open trade equity, and you'll be able to adjust your stops to put in more money in your pocket. So this is why I show you second support and second resistance numbers. It's also why I bring everything into dollar value. Knowing what I can take off the table helps me sleep better at night. And believe me, right now, I need my sleep. So that is it for today's position update. Until tonight, when Trend Trader issues new trades, have a terrific Thursday afternoon. And as always, be well, trade well, and follow the trends.